Okay, so I want us to do a pre-week analysis on EURUSD, GBPUSD, and gold. Yeah, those are the three pairs I trade. So it means I basically want us to do the analysis on the same. So I'll be doing here the live analysis, and then I'll be later posting the video on my YouTube channel. So that you can go through it during your own free time. Yeah, I don't know if my sound is very clear. So I'm not sure if my sound is very clear. So you can confirm in case you hear. Just confirm if my sound is clear. Yes, is my sound very clear? At least if you've joined, you can just confirm if my sound is clear. If you're able to hear me. Yes? Yes. Okay, let me just proceed. Now, first of all, I want you to look at this particular pair on. I want to do it on the time frame first. Now, if you look at the daily time frame, you'll notice that we are very bullish, and it means that we are only going to be looking for bullish setups once we scale down to the lower time frames, because we all know that we should not be trading against the trend. That is the thing about trading. Never ever disrespect the trend. We always even say that let the trend be your friend, because the only way you'll trade the right way, or you'll get the right setups, is if you trade with the trend, not against the trend. So trading pullbacks can be very dangerous, and it needs you to have some required knowledge that most people often don't have, right? So now if you look at this, if for example you look at this EURUSD, I don't use trend lines, I just used it to show you that we are bullish. And you can see we had this low here, we had another one here, and we as well had another one here. So this is where we have the other low. So these are the lows that are in the market, and you can see we've not broken any specific low. So it means if not broken any low, it means that we are bullish. That is what not breaking any low would mean, right? So we'd again want to see now. You see this, the high that was created from this low, it's here. We've broken it, or we've traded past it, so that could be a possible break of structure, but we have to wait to see another confirmation, because now remember this high is still also standing, this high here, first high that was created by the low, by our farthest low. See this low here, and that led to the creation of this high. So this high has not yet been broken yet. So maybe we are not very strongly bullish or do not have enough power to. Now, another thing that you need to notice is, or you need to get used to, is using the Fibonacci tool. So for example, you can have the Fibonacci tool from the low to the high. Just see where the 50% is, and the 50% is always called or referred to as the level or the golden zone in the market. So you can have that. Let me just delete this. Mm, these circles are not of help to us. Now you can see that our fib level is the 50% golden zone. In between the 50% and 61%, you'll notice that you have a very nice order block here that market might have to respect. So first of all, you'll notice that there is a fair value gap here that is in the market. You see here, it's a very small fair value gap, but it's a very nice fair value gap. Here we have this fair value gap, and then at the end of this fair value gap, you can see there is an order block right here. So this is our plus or B, and of course we want this is our plus for B. So now you can delete the fib after you just marked them, because it's not very important, remember. Okay, because the fib is to just show you the golden zone, or the 50% and the 61% levels. That is the work of the Fibonacci tool. Okay, yeah. So by the way, guys, if you have any question, or my network has a problem, you can just tell me there on the comments or on the chat box, at least, so that now another thing I want you to notice that is that now currently we are at around 1.0855, and you can see we are expecting to see a drop to around 1.076. See, and that drop, we are not sure when it will happen or if it will happen, but in the event that that is a pullback, we're expecting to see it get to the fib level, the golden fib level, we've marked using this rectangle. Okay, yeah, so that is the golden fib level that you're going to be trading from. Okay, and I've told you that this is a plus OB, so maybe we can mark this as our OB. So we're expecting to see market drop on the higher time frame. Remember, on the daily time frame, we expect to see market drop to this point, and then you can have pull or a stretch to the upside for our trend continuation. Okay, so we can maybe delete this high, and then I'll just mark this. So that is it. So then now you can scale down. You see, the good thing with this kind of trading, or with my style of trading, is you have to scale down. You just start from the higher time frames and stretch down to lower time frames to check and see what you're expecting in the market. Okay, so this is on the daily time frame, so it will mean that we have to stretch down to the lower time frames on maybe the 4 hour or the 1 hour, now to find the entries or where we're going to be entering from. Remember, the higher time frames are just to give you a directional bias of the market, or what you're expecting to see in the market. Okay, that is what the higher time frames are used for, so that you don't trade against the trend. Remember, I told you that trading against the trend will lead you getting yourselves very bad entries, and you'll do a mistake in your analysis, and then the market will have to punish you. Okay, so you must and you should always trade with the trend. Okay, That's why you even look at the higher time frames in the first place. Now then we can scale down to the 4 hour time frame to just see what will happen. Remember, we still have our zones marked very well on the higher time frame. Remember, I told you guys that this is what we were anticipating for on the daily time frame. And you see, around this zone, now you can notice that we had this stretch. And then again, another thing is, now for instance, now if you delete this, we don't need them now. At least we have a point where we're starting from. So you can see here we have this particular breaker here that maybe might be a stronger zone again for us to trade from as from next week. So I'm not expecting market to go below this breaker block, because in the intent that market goes below here, it would mean that now we would have switched bearish from this low. So this is a low in the market. This is the current low in the market I'm watching out for, and you can see there is not much liquidity at that low to draw the market to around that point. Yes, so I'm not expecting market to go below that low. I'm expecting to see a small drop to this particular zone, which I've told you is now going to be our breaker, plus a fair value gap on the lower time frame. So of course, when you're taking such an entry, you have to go to the lower time frames like the 15 minutes time frame and check maybe on the same zone. You'll certainly see another block. You'll most certainly see another block around that zone, just to have an accurate entry. Because you see, the problem with the higher time frames is they give you a very big, this order block is a very big zone, so you might not know where to go in from. So you see, it's like 30 pips wide, so you might not necessarily know where you're going in from specifically. And when you don't know where you're going in specifically, the thing I advise anyone to do is just go in from the 50% of that zone. So for example, now you could maybe go in from here, from the 50% of that level, and then you can have your target. If it's a sell, target your next OB. That is how I usually do, or that is how I usually advise anyone, or that is what I usually advise anyone to do. Okay. With that, I don't think you can easily make a mistake, because it's a better way of doing your order blocks. Yes. So and then now what is it? And then now the other thing is give me a minute. Let me just show you something. Yeah. So yeah. So what now? I should be looking at another pair. Let me show you. Now let's do analysis on now GBPUSD. So for GBPUSD, now for GBPUSD, so for EURUSD, let me just scale back to the 4 hour. I show you now the exact entry and exit be taking if I decide to go in for this trade. Remember, I will be taking maybe 2 or 3 setups only this week, because I don't want to fumble with the market. That is not what I usually do. Now you see, we'll have a stop of about 30 pips, and then now we'll target back at our high there. So it's a nice entry. So you're going to be targeting that high and exit at that high, because you also don't, because the market will as well punish you in the intent that you're greedy and not contented with what the market offers you. Okay, so that is what for me I'll be looking at. So that will be a nice 180 pips or something like that. So you'll definitely have maybe I can be looking out for. Or that is what now for me I'll be looking out for. Remember, this for education purposes. You don't necessarily need to take the same entries I'm taking, but if you want to take them, you can always do the same analysis on your chart and see if it works or if it really makes sense. So if it makes sense, then well and good, you can go for it. But if it doesn't, and you suit yourself, the kind of analysis that you want. This is for just education purposes. Okay. Yeah. So let's look at GPB USD now. GPB USD. Now we look at the higher time frames first. This pair has a lot of crap because they usually love. If you look at the golden zone, we like plus for us, right? So let me just zoom in, or is it zooming out? Now I was backtesting this pair yesterday, that's why it's very dirty. Now you can see here, this is a very nice OB that you can be looking out for, and you see it has a fair value gap in between there, but the value gap is not very in that fair value gap will be trading from this particular order blocks. Now what we can also be expecting on this pair is a small pull to the downside to fill this particular order block, so we can be going in from that from the 50% of that order block, and then you can have your stops at just below there, and you target the high. You don't have an ambiguous target because you're not sure of what the market is doing currently on this pullback. You never know the end of the pullback. Okay, that is the problem with pullback trading. Sometimes you don't understand, or you cannot even comprehend where this pullback is going to end. That is the problem. And if you want to be trading a pullback, then it means you have to be understanding much about the golden zones and the fib levels, because that is going to be very, very important in your trading of the pullbacks. And that is where now tool comes in, because the Fibonacci tool is what will be showing you the fib levels or the golden zones in the market. Okay, so you must be understanding how to use the Fibonacci tool, and I have made a video on the same. I uploaded it yesterday evening, and yeah, so it will be of help that you also understand how to use the Fibonacci before you even start doing anything else. Maybe if you've not subscribed to my YouTube channel, make sure you do, because why not? Why shouldn't you? Now, should I be showing you about GU? Okay, that is basically what I'll be looking at. Now, the problem with me is that I usually trade GU and EU. So mostly when I have an entry on GU on EU, I'm almost looking at a similar setup on GU. Once I do my analysis on EU, I don't take a lot of time doing analysis on GU, because now at least at the back of my mind I almost know what will happen, because GU and EU are almost and are 80% correlated. Okay, yeah, not inversely. They are correlated in a similar way, like they move in a similar manner. That is the thing, or that is the correlation between EU and GU. Anytime they are moving in a different direction, then we call that. Some people say it's an SMT divergence, but me I usually say it's a thing with the strength of the euro and the pound. Remember, GU and EU are not only affected by the dollar; they are also affected by their base currencies like GU and yani the pound and the euro. Okay, so it's important that you also understand that. It's very, very important that you also understand that, because most people usually get confused a lot on the same. Yeah, so that is it now. So that is it on GU. So let me do my analysis, my last analysis now on gold, and then we can stop from there. And then now for gold. For gold, I'm looking at, of course, we are bullish. So and we've had a pull back to 23 to around 2350 last week, 2353, around just around there. So I was not really looking at gold last week because me, I don't gamble the market. I'm always a patient guy and I always wait to see my setup align itself to all my confluences before I can take a single trade, right? So yeah, so for now I don't know where gold is heading to, but in the event that we have a closure, we trade and close below 2352, then from there I'll be looking for sell setups. But for now, it's very dangerous and maybe you should only be looking for buy setups. Yeah, but if you look at the 4-hour time frame, now this is where I was looking at. So I might not necessarily trade this, but it's okay that you look at it. If you look at the 4-hour time frame, we have this reaction. So you can see we have that you can only notice from the wicks because we don't have any sellers candle along this pullback. But then if you check the wicks, at least you'll understand that at least there are buyers and sellers in the market, just that the buyers are slightly stronger than players are in the market. Now, I was expecting, or I am expecting, a pullback to around this golden level. And if you look at the 1-hour time frame, you'll notice that we have a very nice order block around there. And now I'm expecting to see market pull itself to 61% level, and then we can take a sell from there. So from there, maybe if I decide to be trading this pair, of which I'm not sure of because it has a lot of mixed reactions and I most certainly wouldn't want that, then it would mean that I'll have maybe to take a trade from around there, and then that is a 60 pip stop loss, and then I'll be looking for a reward of around 7%. So 7%, it means that I'm looking for about about 460 pips. Yeah, 460 pips for a loss of 60 pips. That's a very nice RR. So you can see it's a 7 RR trade. Is a very nice trade, worth risking. It's not okay, it can be worth risking, but for me, I'm not sure if I sure will or will if I will take this particular trade, since gold has a lot of mixed reactions and no one is even understanding what we are looking out for. Now, another zone you can be looking out for on gold is this zone here. This could be a nice OB again, so you can also be looking for this. And when you have such setups, when you have two of such setups, now you always term these as medium risk zone, and these are low risk zone. So if these are low risk zone, then it means that now you'll be looking to take a trade from there. Just that now you'll be risking differently. You'll be risking maybe 1% from here, and in case you trade from here, you'll be risking 0.5%. Have two setups. Okay. Yeah. That is the only difference when you have two setups you're trading. So yeah, so that is what I'll be looking out for. That is what I'll be looking out for on gold and GBPUSD and EURUSD. Yeah, so I hope you've benefited from this video. In case it's from next week, so make sure you subscribe to this YouTube channel, and make sure whenever you didn't understand section, and I'll always answer you as well. My number is on my bio. Whenever you have any questions or queries you might want me to help you with, my number is on my bio. You can always ask me. 07438. Yeah, you can as well join our free Telegram channel. The link is on my bio, and free WhatsApp community for those who are beginners. We have free classes ongoing. Yeah, so I think maybe we can stop from there. Yeah, if you've not subscribed to my YouTube channel, make sure you do, by the way. And then you can also leave or drop a like or a comment on the same video. See you.